Welcome to the AlphaMind podcast with me, Stephen Goldstein, and my co-host Mark Randall, where we discuss matters related to trading psychology, trading behaviour, trading mindset, and so much more. The dramatic context of the past couple of years and the consequences of Russia's invasion of Ukraine have awoken many traders and investors to the significance and importance of the power and energy markets. This corner of the international trading markets remains relatively obscure and poorly understood to those outside of it, and yet it plays a far more tangible and significant role in all of our lives than virtually any other markets. On this week's AlphaMind podcast, we have the pleasure of talking to Sven Furman, who is a trader who has been at the centre of the power and energy markets for almost 2 decades, working at leading firms such as EDF and Vitol, and now runs one of the few hedge funds which specialises exclusively on the power and energy markets. This podcast will provide you with some insight into these markets and how differently they operate to other markets which you may be more familiar with. Yet, at the same time, there are many lessons to be drawn from our conversation with Sven, which are equally applicable to trading in all markets, particularly with regard to how to self-manage in the face of volatility, uncertainty, and the heightened emotions that trading brings. First, a quick word about the companies which sponsor the AlphaMind podcast, whose support makes it possible for us to bring you these outstanding interviews with great guests from across the financial markets. We would like to thank our podcast partners, TradeStation Global and the Society of Technical Analysts. TradeStation Global is a multi-asset trading platform with access to international markets. Trade stocks, forex, futures and micro e-mini futures from one account. Leverage professional grade tools like Radar Screen, The Matrix and Easy Language, an intuitive coding language for traders. And with TradeStation Global, there are no hidden price spreads, just transparent, low commissions. To find out more and open an account, visit tradestationinternational.com/AlphaMind or see the link in the episode description. TradeStation International Limited is authorised and regulated by the Financial Conduct Authority in the UK and acts as an introducing broker to Interactive Brokers UK Limited. The firm does not provide investment advice or trading recommendations. Investment and trading involves risk, including possible loss of principal. At present, the TradeStation Global product is not available to EU residents. The Society of Technical Analysts, the STA, are another long-established organisation with a great reputation. They are a member-led and not-for-profit body who have been providing world-beating education to the trading and investment community for over 5 decades and serve the needs of their members by providing outstanding online talks and webinars, regular newsletters, education, diplomas and continued professional development programs. Their home study course has been created by many of the world's leading minds in technical analysis and provides learning of a depth and breadth that is unparalleled in the trading and investing world. Listeners to the AlphaMind podcast can obtain a 10% discount on the cost of the STA home study course. Visit alpha-mind.net and go to the sponsor section of our page to find out how to obtain this. Now on with this week's podcast.
Well, welcome to this week's AlphaMind podcast. We're delighted to have Sven Furman with us, Managing Director and founder of Oracle Trading Limited, an energy trading fund. His history is he was with Vitol for many years, Electricité de France, but obviously, and that's recent history, of course, but really what we're very interested to hear from Sven is just his context and his storyline regarding energy markets. And we know they've been significantly volatile. And obviously he's had to manage himself through that, manage risk through that, manage self through that. And we're really interested to dig deeper into that over this conversation. So Sven, welcome to the show. And yeah, you must be running out of the number of black swans that can turn up for your world at the moment. Tell us a bit about the journey. I think, you've suddenly got something that is just stupidly busy going on.
Hi, Mark. Thank you very much for inviting me to this podcast. Yeah, absolutely. The market at the moment is obviously crazy. It's the first time I can read about my market in the newspapers on a daily basis, really. So everybody seems to become an expert on energy trading. People talking about merit orders and stuff like that, which is really interesting. Very different to years ago, where power trading used to be more of a niche market. No one really understood. But yeah, you mentioned a little bit my background already. I've been in the power market now for pretty much exactly 20 years. I've been working for several firms like Swiss Utility, BKW here in Bern, and then I moved on to work for Électricité de France Trading in London and in Paris, and then joined Vitol together with two colleagues of mine. We've set up the power trading desk for Vitol. At that time, Vitol was trading mainly, obviously it's the biggest independent oil trader in the world. So oil, gas, emissions, and coal. So it's logic as power is a derivative of all these underlying fuels to also set up a power desk at Vitol. So we did that. I became a partner at Vitol after a few years, and then set up my own trading firm, Orico Trading Ltd. Here in Zug in Switzerland. And since 2019, from 15 to 19, I was managing mainly my own capital and that of my partner, Ludwig Fresenius, a German company which you probably know from labor analytics and chemical industry. And since 2019, we are also managing external capital. So we have a fund, and we also have a few managed accounts. And as always, for the last 20 years, we're managing European electricity markets and all the underlying markets, which is coal, gas, oil, carbon emissions as well.
Welcome to the show. We're delighted to have this different perspective. And as you mentioned, over the years, things have rather changed, perhaps from 10 years ago. So perhaps a sort of starting question really is, how much flexibility have you had to have in your own strategy in evolving a plan of attacking these markets and keeping the risk in the right place? What's your typical day? Well, typical day is the wrong question, really, but a sort of a day in your world. There's huge components within the range of products there. They've got lots of different drivers. So I guess trying to keep a handle on them. Just give us a sense on just what that means in reality.
Yeah, so generally electricity is a pretty complicated product to trade because, you have to be an expert somehow, obviously, in electricity trading, but you have to understand all these underlying fuels as well, as if you were a coal trader, as if you were a gas trader, as if you were an emissions trader, because by burning coal, you actually generate power. By using gas for electricity generation, you're generating power. So the gas market has a direct influence on the electricity market. Hence, the data points we are managing on a daily basis are massive. So it makes it probably one of the most complicated commodities to trade, really. And power is not a storable good, which makes it particularly peculiar, because you need to consume it exactly in the moment when you produce it. And as it's not storable, kind of reality kicks in once it physically delivers. So we trade power pretty much similar to all the other products. We have forward contracts, we have future contracts. We trade everything from day ahead up to, I would say, liquidity-wise, to 3 years ahead. We're here at Orico, we're trading mainly highly liquid markets, so Western European electricity markets, Germany, France, Nordics, Italy, Benelux. Not so much involved in Eastern Germany, although very interesting market, but not liquid enough for us. So our investors don't like that. They like to have highly liquid products, and us as well. And these, as I said, these power markets are extremely data intensive. So the way we trade, we use stock models, where we try to simulate the electricity demand, and also to forecast the electricity production at the same time. And then we have these stock models, which you can, if you want to try to envisage it, it could look like as if you had an empty glass, and this is the electricity demand, and then you try to fill up this glass with production. So first of all, you fill up the glass with wind energy and solar energy, because this is intermittent energy, and it's producing anyhow. It has, in that sense, no costs. Of course, it costs money to build these plants, but once you've built them, they're producing energy for free. So they are the first ones to be put into this empty glass. And then you have nuclear plants at the moment. You have then lignite plants and coal plants. And then if the glass is still empty or not full enough, well, you have to fill it up at the moment with gas, gas-produced power, electricity. And because gas is extremely expensive at the moment, also electricity prices are very expensive.
Really appreciate that. And I think that the depth of the market. I mean, when I started to get involved with power on the clearing side, we went over to eWorld in Essen, and which I'm sure you've been to many times. And we walked into this thing about the size of Olympia in London, and it was just endless. The diversity, the intensity, the number of people there from the trading world that were turning up was huge. And of course, we all need power. So the relevance of it as a product, in terms of, rather than just being a sort of interest rate product or foreign exchange product, the economic relevance of it, makes it, for me, much more interesting than just, sort of a standard financial type product. So when you're on this journey, though, and you're making these, directional decisions, what are the drivers that you're using? I mean, obviously you're having to apply some technical, but there's a lot, as you say, a lot of data stuff going on that you having to consider as well.
I mean, we're using also technicals, obviously, to enter a position or to exit a position, but mainly it's really a very fundamental driven market, which has a physical delivery taking place at some point. So, for example, we trade similar to other markets. We trade these forwards future markets. For example, we can trade the month ahead, which is October now. And this October product can, go up and down depending on what the forecasts are doing in terms of weather, availability of power plants, demand, and all kinds of, political issues which are currently happening. But at some point, this power gets physically delivered. And because it's not a storable good, on the day of delivery, and for example, the 1st of October will deliver a day before, and then the 2nd of October will deliver on the 1st of October, and so on throughout the whole month. And then it will give you an average. And in this moment, there's no speculation possible anymore. All the hedge funds, banks who have no production and no consumers, they have to flatten their position because they cannot store it. So it becomes from being a very a financial product, it becomes a physical product. And in that moment, when delivery takes place and all these, let's say, financially driven players have to flatten their positions, you see reality happening. The price you see in the physical delivery is actually the real price that sets the price in that single hour in Germany or France or Benelux or whatever country you're currently trading.
It's then reality. So and that's huge risk for people that don't know what they're doing.
Probably the most important factor is actually weather. when you think about it, we have more than 100,000 megawatts of installed capacity in solar and wind in Germany alone. So if the wind blows or not, it makes a huge difference to the price of the next day or the next week or even an hour. And the wind can change within the hour. So we trade only day ahead markets, but there's also an intraday market. And the intraday prices are sometimes completely different from the day ahead market, because the wind forecast and the solar forecast keep changing all the time.
For me, I always have a question with this, because I've been introduced to power and energy trading over the last few years through the work I do, but it's a very different market to the financial markets I'm familiar with, and to the financial markets I know a lot of our listeners will be familiar with. A lot of them are from equity backgrounds. We get quite a lot of crypto traders listening, and then a lot of sort of conventional macro markets like bonds, rates, foreign exchange. We do have an increasing number of energy and gas traders, but it's always interesting for me, because I'm often trying to translate some of what I hear when I hear energy and power traders talk into something that I can kind of recognize with the backgrounds I come from. And sometimes some things just don't translate. I think, like you talked about, the intraday markets being completely almost disconnected from the sort of the markets you have each day, sort of going forward in the forward market. How would you sort of best describe that? It's almost like a separate ecosystem. Would that be a fair description?
Yeah, it probably is a little bit. I mean, first of all, the power market is also, independent of all the, usual traditional markets like stock and bond markets. We have our own life. I mean, we're looking at, for us, it's important. As I said before, for us, it's very important what the weather forecast looks like for the next few days and weeks. For us, it's important if we have power plants issues in the future or not, which makes it actually quite interesting also for our investors, because that's exactly what they're looking for. They're looking for a product which is non-correlating to their traditional markets. They're normally invested in stock and bond markets, and they're looking for some kind of an alternative investment. I mean, we call ourselves, or we are actually an alternative investment fund. To answer your question, it is as if we have our own life, really, but fairly connected to all the other energy markets, such as coal, gas, and so on.
As a sector which has really grabbed the headlines in the past year or two, both with supply shocks from the pandemic and the change in the sort of energy structure throughout much of the world with everything that's going on, and then of course the Russia-Ukraine situation. Are you finding a lot more interest coming into your area?
Yeah, absolutely. I mean, as I said, just probably 3, 4, 5 years ago, it was really such a niche market. And to our investors, we really had to explain everything, because they knew nothing about it. They were interested in alternative investments, full stop. But what exactly it might be, they didn't really care so much. But now you can read it in the newspapers like on a daily basis. And yes, obviously, because everybody's reading about the Ukraine story, COVID had a big influence on our market. As the demand dropped, now demand is also dropping, because the electricity and gas prices are so high that the industry, some parts of the industry can't produce the way they produce, because energy is just too expensive. So yes, it also has a big influence now on everybody out there. Hence, investors becoming also more interested in being invested in this market.
And are you finding that, again, you have to do a lot of explaining to investors who perhaps are used to investing in what we would call very standard, very generic market products? Do you find that, I mean, I do quite a lot of work with hedge funds here in the UK and in the US and Asia, and that the quality of their relationship with their investors is absolutely crucial. And at times it can become fraught as well. And they're quite generic products, quite well-known products. So I wonder how it is managing the relationships with investors, with the products that you work with and the nature of those products?
I think it's important that you don't have only one or two meetings in the beginning and that's pretty much it, and then be happy with the return. I think you need to educate them throughout the year and explain, like, why are we taking these positions now? Why is there some risk involved, but also maybe some potential good upside? And this is something I think they need to learn and to understand, because it works completely different to what they are used to do. Obviously, we can go long and short in the markets. We can hedge ourselves with options. We have all kinds of products we can use, but we should be able to make money in the rising and also in the declining market. So we have no excuse.
I think it's important to understand also where your mindset has come from as well. We often talk in our podcasts about, mindsets that appear to be successful within the trading business. And when your own background is you've got a master's degree in mechanical engineering and business studies, which if you look back at our previous podcast, seems to be totally the right recipe to walk into trading with. I want to go back to that time. I mean, so what got you into this space in the first place, Sven? Obviously from that degree and with those qualities, you then walked into the market as a preferred market, because of course, as you've described, it's not the easiest market to understand.
Yeah, during my studies, a good friend of mine and I, we were trading. That was the time where the dot-com bubble was created, and we were, for the first time in our lives, we're also participating in these stock markets. We were trading options, and we had no idea what we were doing really. We bought stocks, we sold stocks, and at some point, this friend of mine, he made an internship at a utility in Germany, and I remember he came back to me and we met for a coffee, and he said, like, you wouldn't believe it, you can actually sell something you don't own, you can short a product. And I was like, wow, this is really interesting. I never heard about that one, but that's really exciting. And then, somehow and there was actually a utility, so an electricity trading company. And then from our interest in normal financial products, we were quite interested in electricity trading, also because of our engineering background. So we understood a little bit more than maybe other traders about how power plants work, how the whole engineering behind works. And to be honest, until today, it helps me quite a lot to understand how a power plant can be ramped up or down, how quickly, what does it mean if there's a failure with a technical device in a power plant. At least I have a basic understanding of that. Does it make me a better trader? I hope so. But I think most importantly, it creates an interest of the market. And I think you're good probably in trading markets when you are interested in what you're doing there. And I find it extremely interesting to read and learn about energy markets. And I think, that helped me probably quite a lot throughout my career.
Yeah, and that's an important part of the psychology that we talk about. You've got to enjoy it. I mean, then you think positively about it, and then you can take the knocks.
Yes.
You're going to be getting knocks, particularly in the power market, because it can get a bit nasty, as we know.
It can. I mean, if the power market is tight at some point, we can have extremely high prices. We can even have negative prices if we have too much wind. So the price range is massive. There are the moments where you're in front of the wave and everything goes really well, and you're making money and you understand how it works. But that can change in a moment, and suddenly you're behind the wave and you don't understand anything anymore, and it can be like super painful.
Yeah, no, absolutely. So tell me, over the last sort of 3 years, we've seen this significant change where standard deviation models sort of go out to Z scores never seen before in terms of the volatility. How was that for you? I mean, did it feel like you were entering a new world when it all just went so crazy? Were you changing your models? What were you doing things differently, or did you stay on the original path?
The models are actually working pretty well, I have to say. And to be honest, for us, it doesn't matter so much if we are trading at 50 euros or we're trading at 500 euros. But in terms of trading, it doesn't really matter so much. And we are mainly trading spreads. So we don't trade so much, outright power, long or short, but we're trading power against gas, we're trading power against coal. We try to behave in the market as if we are actually power generators, which we're not. And if you trade these spreads, well, obviously these spreads are also going up and down, they're moving and are volatile, and they're more volatile than they used to be, yes. But in general, they're much less volatile than just trading the outright product.
Yeah, I think that's a very important lesson for people. I think I'm very underestimated in terms of people think about, direction of the outright, but of course, there's a whole world of creativity that lies in the spreads that are out there. You need to balance spreads and manage it appropriately. But certainly, from my experience, the smarter money was looking at the interrelationship, the relative value type trades, than the directional trades. So I can thoroughly understand it from your point of view. But I imagine though there were a few days, let's say, where it got a bit stressful and things got a bit overwhelming, as I think several have reflected back to me, even with some of the spreads. So how were you managing doing that process? I mean, with the sheer fact that it seemed like the dynamic was changing.
So you're mainly talking about now the last year where spreads have been widening quite a lot and being more volatile. Yeah, in this due to this energy crisis we're currently in. As I said, like we are probably focusing a little bit more on the shorter end. That's also due to higher margin calls. So the market is a bit more illiquid, everything which is further out. But in general, we're doing nothing different to what we're used to do. We size the position accordingly to our confidence level. And then it becomes kind of like almost like a robotic mechanic way of trading. So once we've decided if it's a 5, 6, 7, 8, or 9 out of 10, it's never a 10 out of 10, then we put on a position, stop, and the products we are trading are so liquid that we can get in and out fairly quickly.
Okay, I was going to ask that question actually. It feels quite systematic in the way you take risk and you manage risk and you structure risk.
Exactly. Yeah. And we call it like, we say it's not like it's more like quasi algorithmic. It's systematic, but quasi. It's not like really an algorithmic trading approach, because it's not, but it is very systematic. Yes. And that helps you, obviously, that you can also sleep well overnight. Because if you're doing this job now for 20 years and you can't sleep well, it doesn't work.
You know what? I love hearing these, because it doesn't matter what market you trade, what product you trade, what time frame you trade, what style. But you're talking about some very fundamental human qualities. I used to trade to sleep well, and if I couldn't sleep well, I'd at very minimum I'd hedge the trade overnight till I'd got my head around some of the risk I had on, because it's really important to. It's sleep is about feel, and you must feel confident in your trade. However systematic everything is, there's always a psychological and an emotional element to it.
Absolutely. I see it the same way. And to be honest, this is probably also some kind of a gut feeling, because there can be, numbers are numbers, but there's also a feeling about a trade where you think it just feels good, or something doesn't feel right, although the numbers look good. And that probably prevents you of sleeping well, and probably very often makes you also losing money if you don't follow that. So I'm also a trader. I would say I listen to my gut feeling. It's probably something to do with my wife Anna. I mean, she is a psychologist, and she told me once that traders often want to be like very robotic, very mechanic. They just want to execute a plan and don't be emotionally involved in the trade. But she said to me, like, your gut feeling is almost like very mechanic. When you look at charts, you have a feeling straight away. Is this, even if it's something you don't even trade? Let's say wheat. I don't trade wheat. I've never traded wheat in my life. But probably if I look at a chart, I can tell you it looks bullish or bearish to me. It's just a feeling about it. Yeah? And I think that's quite important. And I listen to my gut feeling.
We'll return to the podcast shortly. The AlphaMind podcast is sponsored by TradeStation Global and the Society of Technical Analysts, the STA. TradeStation Global is a multi-asset trading platform with access to international markets where you can trade a range of instruments from one account and leverage professional grade tools like Radar Screen, The Matrix and Easy Language. And with TradeStation Global, there are no hidden price spreads, just transparent, low commissions. To find out more and to open an account, visit tradestation-international.com/AlphaMind or go to our website alpha-mind.net or see the link in the episode description. The Society of Technical Analysts, the STA, provide world-beating technical analysis education programs and offer outstanding membership services. AlphaMind podcast listeners can obtain a 10% discount on the cost of their excellent home study course and home study course with a diploma package. To find out more about this offer, go to our website alpha-mind.net or see the link in the episode description. Now back to the podcast. And this is a very important thing to remember. If you don't add that element of yourself or your personality or your feeling to it's not going to work. It has to have an edge of some sort, and the edge is what you bring to it. So when you were talking a little bit earlier on about you've got a deep interest in this, it's not just for the money. It almost felt like it's a game for you and a personal challenge. And then of course you bring your knowledge of how to build a power station, which, let's face it, there's not that many people who have that degree of expertise, behind
Yes,
you, how it all works together. And that gives you that. And again, then that's probably where those feelings come from, because you could probably sense when something is not right that maybe others can't.
I hope so. I mean, after 20 years of trading in these markets, I hope I can sense a little bit more than maybe other people can't. I hope that's the case. I haven't done any analysis on it, and I can't tell you for sure that this is the case. The only thing I can look back is my performance.
Are there any other aspects that you feel, you bring, or a part of who you are, or maybe even how you work as a group that really helps add value, or at least keeps you honest to what you do?
Can I say something before, just before I forget to say it? Yeah.
Yeah.
We were talking about the gut feeling, and what I wanted to add is that I think in a trader's career, something you should really work on is to get to know yourself. I think you mentioned it in your question. You need to get to know yourself of who you are and how you behave in certain situations. And then I need to adapt myself and I need to change my behavior and become better. Because in the end, what we want to do, we want to become better. We want to be, better in what we are doing, less stress and same or better results. So that's the goal.
Yeah, no, that's brilliant. And just to sort of bring this out into the open, I know Sven's wife because we studied at the same coaching school in London, and I also spent some time talking to Anna on coaching with traders. But just to sort of re-emphasize that point which you said, and last week we've just come back actually from Switzerland ourselves, myself and Mark, where we've been coaching a large group of freight traders, a very large commodities firm. And just on Friday, Mark made a really good point to someone who came up to him and said, look, we're really appreciating this coaching work you're doing with us as traders, helping us to become better traders. And you said something, Mark, really profound. You said, we're not coaching you to be better traders. We're coaching you to be better yous so you can be better traders. And I just thought that really kind of summed up this aspect about it. It's about you and how you turn up and how you get behind yourself and how you understand who you are, so that you can go out in that world and be more effective and be more resilient and back your own decisions and know when to step back and step away and when to resource yourself. And I think an awful lot of people forget this. They think there's an answer out there when really often the answer is in here.
Yeah, I couldn't agree more. When you think about it, look at our market. There are probably a few hundred like super intelligent traders sitting out there. They all have a nice degree and they're good at what they're doing. And everybody is good at numbers, because normally when you trade, you need to deal with numbers. You do your statistics, you program. So you're competing with very smart guys out in the market, and you try to be better than the others. So exactly, what is it? Can you build better models? Yeah, probably you can, or hopefully you can. You can do a more thorough analysis. You can go the extra mile in your analytics, which is definitely a very important part of it. But the other part is, how do you deal with your emotions during trading? How do you? For example, there can be some very simple rules. If I haven't slept well, I'm not allowed to open a position. I can close a position, but I'm not allowed to open a position because I haven't slept well, because I'm not feeling right. Maybe something's on my mind. Maybe nothing to do with trading. Maybe my son is ill, or maybe maybe I've got COVID and I don't know, or whatever that might be. Or maybe I had a glass of wine too much on a Thursday evening, because it just was a nice evening and I've met an old friend of mine. Well, I'm not trading on the next day. And these are like simple rules. So if I realize I'm losing money, first of all, I cut my positions. I become much smaller. I maybe exit my position completely. If I feel I'm not in the right mindset, I close my positions. I rather go for a walk. It's much cheaper for me and for my investors to do that, or go for a long lunch instead of just constantly being invested in the market. And that's, if I can say that, a very big disadvantage in many trading firms. And that's a very good advantage we have here, because here I'm my own boss. I can trade whenever I want to trade. When you sit at Vitol or Glencore or all the other firms, people walk around you and they ask you like, could you do something today? What was happening in the market? How are you positioned? And I think, I don't know. Honestly, I don't know. I don't want to have a position. I just want to go for a walk, but you cannot go for a walk because you're getting paid to sit in front of the screen and watch the numbers tickling. And when you sit there for a few weeks watching these numbers going up and down, well, you have to do something, and you will do something. And I promise you, most of the time you will lose money on that. And this is so bad. And that's what's happening in a lot of trading firms. I've worked for 4 or 5 different companies and I've seen it everywhere. And that's a big advantage I have to say. And I need to explain that to my investors. I tell them sometimes I don't trade if I'm not feeling right, and if there's not something compelling coming up to me, well, I just don't trade. And that must be okay for you. So there will be no performance for the next 2-3 weeks. And that's fine. And trust me, it's better this way, because if I do something, I will probably lose you some money.
Wow, that's such a powerful story you've just told there, Sven, and many lessons for those out there that are tuning in. I think the concept of tracking your mood and trading your mood, as I say, is just it is tradable. It's up and down, it's all over the place. And if your mood is at a very, very low level, your energy is at a low level with it, you're distracted by yourself, that's not a condition to trade in. And
yes,
the feel good is, because as soon as you feel good, you're tuned into everything. You're much more aware. Your attentiveness switches onto an idea, and then that turns into commitment. All those things work when you're in a good mood. I think mood is something that's not talked about enough. We talk about the dynamics of mental health and whatnot, but I think mood is something we really don't talk about. And keeping ourselves in a good mood and realizing that sleep is an edge. Yeah, if you can sleep well, yeah, well, chances are you'll turn up in a good mood. So manage sleep, I think, really important. I'm very grateful you covered that.
And now imagine you're in a bad mood sitting in a big company like Goldman Sachs.
Yeah.
Do you think anybody cares what your mood is at Goldman Sachs in the morning? No one cares. And that makes it difficult because, trading is not like building chairs. It's not like, oh, you've built 10 chairs a day. That's good. Well done. It's more an art really than a science. I mean, it has its science part, of course, but it's also an art, in my opinion. Go to an artist and tell him, paint the nicest painting you can imagine now. Good luck with that.
Myself and Mark talk about this concept which we call ideal trader state, which is not, as some people have misunderstood it, idea of a model trader, because we're all different. But what is an ideal state to perform most optimally? And you have to be in a certain way to be able to get to that place. You can't will yourself to great performance, but you can put yourself in a state, adopt stances which ensure both good performance is more likely, and when the inevitable setbacks happen, which is part of dealing with uncertainty, that you're resilient to them and they're less able to be knocked off balance by them. And I think Mark and myself both felt that you were talking almost about ideal trader state there, this concept.
Yes, I mean, to be honest, there was also a reason why I set up my own trading firm, because I thought, I can make it better. I can build a better environment than what I've seen out there. A good collaboration between, the other traders, a flat hierarchy, easygoing. I don't want to have, there can be the best trader on the planet, but if a big-headed guy sits in your office, he can destroy a whole team. Yes, this sole guy can maybe make some good money, fine for him, but he can destroy a whole team. So that's not what I want. And that's not only for performance purposes, but it's also for your personal health and life. You want to enjoy your life. You don't want to sit there and scream at each other. And I've seen also these things. It doesn't make sense in my opinion. So, I wanted to create my own world where it works the way, not only me, but also my colleagues want to work together. And I think that's super important. And I think in this way, you can be successful for many years, and you can still have a very wonderful life next to it. Whereas other traders who maybe earn a good amount of money, they're so stressed out that all they wish for is to have a very, very good year, collect some bonus, and then bugger off and do something else in their life. That's exactly what we are not after. Obviously, we take a good performance. Don't get me wrong, but that's not the only motivation that drives us.
Lovely. Well, perhaps it's a good time to ask you a few more things about Oracle. I think this is this new vehicle that's an investor vehicle, basically. Trading energy. Perhaps you want to tell us a bit more about that at this stage.
Yeah, so we are trading firm here based in Zug. We used to mainly manage our own capital, and then actually came only the idea of managing other people's money. That was not our first idea when we set up the company. The first idea was actually trade our own capital. And we are a small firm. We have a few employees. We have our edges, As I said, like weather-wise, we are fairly strong. We have very good, so we've done our homeworks also in fundamental modeling, so we know what we're doing there. But the greatest asset, as I said, as I described before, is really that we have the freedom to trade what we want and when we want it and in the size we want it. And our investors accept that. And when you think about it, an investor is almost like your employer. You know, it's you don't, yeah, you don't have to show up in his office every day, but you know, in the end, you know, he gives you the money to trade with.
I think that's really interesting, and I'm just minded to our last two guests who both ran hedge funds and both in the end decided to close them down. And I think a big factor of it was the relationship with the investors and the constant, why aren't you invested in that, or why aren't you invested in that? So it's, managing that relationship is key, and especially Tom. And you reminded me something about him as well, that Tom was featured in the Market Wizards book nearly 30 years ago, and he was called Mr. Serenity by Jack Schwager, and
Yeah,
and
I
he
read all
said
of
that
them.
you've read all of them, yeah. So he but I think Jack said to him that I consider you, even though your returns weren't the most outstanding when we compare it to when he compared it to some other ones that he interviewed. He said, you just had this attitude to life where, you know, you were happy. You weren't owned by the need to make crazy money or to take crazy risks, but actually, sleeping at night, being at peace with things, was really important to him.
Yeah, it's also very important to us. I mean, obviously, it's a joy. I love it. You know, if I make money, I'm in front of the wave and it's running well. I mean, there's no better feeling in the world than this. Yeah, it's just so nice. But the bad moments where you actually lose money and you feel like you're behind the wave, you need to cut them pretty quickly to be able to think straight again. And I think to find this balance, yeah, just takes some time. I'm sometimes really surprised that it takes so long. I thought I will find out a little bit earlier, but I had to learn it the hard way.
Absolutely. Listen, Mark, I'm conscious of the time and we need to sort of start bringing this to a close, but I've really enjoyed it. Any thoughts from you?
Well, listen, I think Sven has sort of talked about things in such a sincere way that there's some very big messages there. You know, the concept of guess loving what you do, and having a sort of a curiosity about it from his university degree was translated into, hang on a bit, I can trade a world where I can go short in. I mean, let's play with this. And then for it to be a world that you understood down to basic, how to build a power station almost, but perhaps, but you just understood this stuff. And I think the lesson of spreading between products to lessen your emotional risk and your own emotional volatility is a really, really important message. Sizing yourself so you can sleep at night, is important, because sleep is an edge. If you're not awake to the market, your senses are turned off. You can do crazy things in that state. And as you said, Sven, if you're not in the mood for it, that's the time not to trade. I think this checklist approach, where you're measuring, the confidence variability on the trade that you're considering, and above 7 you're doing it, and below 5, well, let's move on. Really important process, and I think that people need to have appropriate process. But yeah, it's been an absolute delight talking to you, and great to get the perspective from what is a very, very nasty market on the face of it, a complicated market, but lots and lots of different players, as I know from my experience, and some very interesting players too. And I guess there's going to be some people out there thinking, wow, I can actually get a job as a weatherman in one of these trading businesses. I've never considered that. But that's interesting. It's kind of like real life, right? It's the stuff that really does go on. So do you have a website and stuff where people can find you if they want to tune in to Oracle, unless Steve wants to throw anything else in at this stage?
Yeah, absolutely. Yeah, there are two websites. There's the Oracle website and the Oracle Energy Trading Fund website. And on the Oracle Energy Trading Fund website, there's probably a bit more information to what we're doing. And we're going to continue in putting some stuff on it at the moment to make it more accessible to investors who probably have never heard about electricity trading or have no knowledge about it so far.
Okay, and we'll make sure we put those details on the episode notes. So if anyone's listening now, just go on to the episode notes on whichever service you'll use, and all those the links will be there.
Great.
Okay. Listen, this has been great, and I've really enjoyed it. And pardon the pun, but you've illuminated me a little bit about the energy and power markets, and hopefully you've illuminated some of the differences and some of the similarities in those markets compared to what we would say maybe a more conventional or better known markets.
Yeah, and it's interesting that there's a lot of graduates listen to this sort of podcast. It's a massive educational piece. If you look back at, we're getting on to nearly number 100 now. But for them to suddenly realize that there are these people called like Vitol and Glencore and Trafigura and Mercuria that are out there trading some very, very interesting things in size. So it's not just hedge funds and asset managers. There's a whole bunch of guys that are trading the market as well in the real sense of the actual product. And of course, the huge commodity traders like Archer Daniels, Dreyfus, Cargill, all those types of guys, Bungie. There's a whole world out there of stuff that's trading the real world that many people just don't know are out there. So really interesting.
Yeah, thank you. No, I find it interesting myself. That's why I'm here.
Excellent.
No, absolutely, and I like talking about it. I mean, as you hopefully discovered tonight.
Just noticed. Yeah, we've slightly noticed that.
No, we can hear your passion. It's coming out, and I'm hoping our audience will be hearing that as well, because we get many messages. I literally had one in the last 5 minutes from people thanking me for these podcasts that we do. Yeah. So, and that they learn so much for themselves, and it's not an easy job to learn. So when you experience people like yourself talking about it, it's got huge value to them as well.
Yeah, I think it is very interesting. To be honest, your podcast, I was listening to a few of them, and it's always interesting to hear what other traders are thinking and how they're doing it, and how they approach the market. Very interesting. You can learn a lot. Also, these market withers, when you think about it, he describes so many different trading styles. I think these are the things if I could recommend something to a new junior trader, is like listen more to these podcasts, read a few of these books. Yes, the math and the statistics, we all know that. We've been to the university, so that should be fine. But the art behind the trading, this is something you can learn. It just takes many, many years, and you can learn and listen to others who have actually done it for a few years, and that probably helps a lot.
Yeah, anyone can acquire the tools. Obviously, you need to go to the right places and obviously have the right degree of, I suppose, sometimes intelligence, but that's not really a defining edge. I think, like you said, being able to execute and being able to carry it out and developing the art and the sort of inner and the mental skills and the human skills really are where the edge is, and then nurturing that over time.
I mean, if I can give you just one little example, one last little example from my own experience. I was working for a company once, and there was an extremely good analyst. I mean, he was the brain, he knew everything. He was so good. When you asked him a question, he knew everything. And one day I asked him, like, okay, but why don't you trade yourself? If you're so good. He said, oh yeah, man, I've tried that once. I messed it up completely and I never want to do it again. Okay. So it's not for everybody, right?
Yeah. And that sort of honesty is really important. I know a very well-known analyst, fundamental analyst in the rates and FX space. And this guy is a genius. And, I've seen some of the stuff and the work he's done over the years and how good his forecasts have been. And I've said to him, why don't you trade this stuff? And he says, I'd be a terrible trader, Steve. I'm far too emotional. And then I'd lose my ability to be a good analyst because I'd be too invested in certain positions that would blind me to the work I do. So he said, I'm happy to stay on this side of the fence and keep doing what I'm doing, which I've got a passion for. So, it is really important, like you said earlier on, to know what you want to do and to know where your passion is and to know what you enjoy doing.
Absolutely.
Super.
Listen, we're gonna leave this now, but it's been really great speaking to you, Sven. I just want to say thank you for being such a great guest.
Yeah, really appreciate it.
Steve, Mark, thank you very much as well. It was fun talking to you.
Thank you for listening today. We would like to thank our podcast sponsorship partners at TradeStation Global and the Society of Technical Analysts, the STA. You can find out more about our sponsors at our website, alpha-mind.net, or see the link in the episode description. TradeStation Global is a multi-asset trading platform with access to international markets where you can trade a range of instruments from one single account and leverage professional-grade trading tools. Visit tradestation-international.com/AlphaMind to know more. The Society of Technical Analysts, the STA, provide well-beaten technical analysis education programs. AlphaMind podcast listeners can obtain a 10% discount off the cost of their excellent home study course. We hope you enjoyed this episode. If you did, we'd appreciate it if you could leave a friendly review or provide a rating for the show on whichever podcast service you use. You can find out more about us at our website, alpha-mind.net. You can follow us on Twitter at AlphaMind101 and at AlphaMind102. And you can connect with me, Stephen Goldstein, and my co-host, Mark Randall, on LinkedIn. You can also follow us and can check back over some of our past episodes on the AlphaMindPodcast.com. We wish you the best of luck in the markets. Have a good week.